Good morning, ladies and gentlemen. How we doing? Let's get down to it. All right, let's see here. What has to come off the list? This has to come off the list. Still in position on that. mRNA died like we expected it to. These guys are gone. Actually, I want to keep this guy here. Ah. Okay. See how the markets are doing. Not the green across the board that we've been seeing lately, so that will be interesting to check on why that's doing that. He's looking red. Europe's not looking super strong. What is going on? Oh shoot, I forgot to change that. Oops. Gotta change the title. It's a new day. Today's not the 21st.
Yeah. Okay. Okay. Think it's about time for me to go in. Like I dive deep. Like I'm last week night with the flow.
Alright, there we go.
Johnny boy, my peeps. I'm an infotainment state. My brain ain't contained. Keeps spilling out. I'm belligerent insane. My drink don't stay in place. I'm just two girls, one company. Keep it hipster like succulents. My name be a succubus. Swear I'm better than younger me, but I'm still just as hungry.
Alright. Let's see here. What else is here worth taking a look at? Alright, China drops GDP target, commits to trade deal. Oh, so maybe China's not as resilient as they had initially said they were? Go figure. Big shocker. See, this is interesting because I think from a North American slant, we are taking a look at this and saying, oh, look at this. They're saying they're going to work together with the United States to implement the Phase 1 China-U.S. Economic and Trade Agreement, right? And we're going, oh, look, that's a great thing. China's saying that they're going to do what they agreed to do. My big concern is like, well, of course you are. You signed something saying that you were going to do that. The fact that you have to reiterate that is almost as though you're trying to give us some false assurance. That's concerning to me. That right there is not like you don't say we're going to work on this. It's a contract. It's an international trade deal that you signed. Of course you're going to work on it. You're going to do it because you said you were going to do it. Ugh. Moving on. Okay, IBM is cutting an unspecified number of jobs. Thousands of jobs. Fauci's back. Love it when Fauci's back. Okay, so Fauci's back in the game. Okay, BDX is worth watching for all you options beasts out there. $20,000 jobs from Nissan. Hong Kong tumbles. Oh, that's the last thing that you need is the US and China going at it over Hong Kong. Good morning, Levi. How you doing? Yeah, it's red. It's red. China's causing tensions with Hong Kong. We've got the U.S. that isn't really doing much. We've seen lots and lots and lots of job cuts. Okay, so Hertz is bleeding out. Icon still has a large holding, but that's probably because he's just stuck in it. Let's take a look at month to date. So, I mean, this could go either way on this news here. So, Hertz, all right. So, we'll do, man. Hmm. Okay, so Hertz could go either way. So, if they're able to get an agreement with the creditors before the end of day today, that news is going to drive Hertz up in a big way. If they miss the deadline and they default, well, they're in bankruptcy. Yikes. Yikes. Okay. Let's get down to it. Lacidin acquired or acquisition news. SEC makes a change to disclosure requirements on acquisitions. That's good. And that's in order to defend the rules they put in around China and how they're entering the market. Okay, Hickman gets approved. Let's put on music again. Okay, what else do we have here? think I can get rid of this feed. This one's just not specific enough. Orphan drug designation. Okay, so let's start there. Akari Therapeutics. Yes. Yeah, they're already up 220. So I agree. I like this. I think iPick should be where side-eye is. So if you look at side-eye and you look at iPicks, that's where the stock should be. So it'll be interesting to see where it goes. Mm, won't go in effect until January. So anything else throughout this year, which probably will put a rush action on some mergers and acquisitions if they want to sneak them in under the radar. Hikma Pharmaceuticals. Hikma Pharma. HIK. Pink sheet. Nope. Okay, so that's out. What else we got? We got Okay. Synovian announces US FDA approval Kinmobi. Synovian.
I've been waiting all night. Watch you blow a mile. Please don't come over, 'cause you're not sober. Yeah, now you know that ain't right. If your dude knew you was coming over, that would be a problem. Yeah. If our friends knew undercover love and they would try to solve it, yeah. The end.
Ooh.
What we do, it stays between me and you. Me and you. What we do, it stays between me and
Had a nice jump up from the start of the week, or from last week, I should say. I think there's huge potential there. I really like this play. Okay.
if your dude knew you was coming over, that would be a problem. If our friends knew undercover love and they would try to solve it, yeah. Me and you, what we do, it stays between me and you. Me and you, what we do, it stays between me and you.
Okay, so Synovian's plays on the approval of Parkinson's disease. AQST is tied to that. How big is Synovian?
If it's wrong, then tell me that I'm wrong. I don't care. It makes me happy. And if you're happy, then let's be happy. Then let's be happy. Yeah. Me and you, what we do, it stays between
2.86 billion.
you. Me and you, what we do, it stays between me and you.
All right. Retail sales without cars, retail sales with cars, oil positions. That's it for financials today, so not a ton. Monday market is closed, so expect people to make that extra little move. Check out the PDFA calendar.
All I wanted were some sunny days, but they never seemed to come to me. Tried to get him out his dungarees, never got past having lunch with me. Guess it's funny how when some
And her to and her to FDA grants ODD to medicines and yada yada yada. So that's AstraZeneca gets another approval. AZN. Orpha. Apparently I can. I don't know that I can do it without my hands though, so yeah, I don't think I can do it without my hands. I think I might have been able to at one point though. It's one of those things you do when you're back in high school or whatever when you're bored and tired, right? All right. Celos Therapeutics. Please be publicly traded. Celos, yes. Yes, 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 yes. Yeah, I like that. Man, oh man, do I like that. That's gonna be that's the big one for today. All right, let's check out. Okay. So that's good news on Berlacidin. Tetraphase. Full year estimates don't matter. I just need news about the trade deal. What's going on with MFA? Good morning, Kimmy. Okay. Okay, so they're saying that switches are going. Yeah, we can definitely take a look at Take Two. Yeah, this is one of those companies where it's just a strong long hold. I don't think you're going to see explosive growth out of it. I think it's just one of those ones that's going to truck along for a while. Probably peak at around the 160 mark on this recent run, and that'll be it. And then you just hold it. It's not going to go anywhere. It won't go up and it won't go down. It'll just be a solid place to have your money. Okay, they're saying that these things are. Let's check out the Switch. $800. This thing normally goes for $290. It's going for $900. Holy cow. All right, this is big. That's big for GameStop. There, there is. So there's a group that has large holdings in GameStop that has been threatening to vote for removal of two members of the board. Um, GameStop came out and said, "Oh no, we don't need to do that. These guys bring a lot to the table." The response from the investor group is, "The hell they do. They buried this company in debt. They have outdated skill sets. They're not relevant to today's market. Get them out." India unexpectedly cuts their interest rates overnight to 4%. Interesting. Yeah, it's essentially saying that there is a board vote that's going to happen on removing members of the current board, which is exciting. It's funny that you say that. Like, So you just mentioned Take-Two, and what do I get? Oh, look, there's new DLC available. Ha ha ha. I wonder why Take-Two is giving Civ 6 away free. It's because it's the same weekend of a new DLC. There it is. Teddy Roosevelt and Catherine de Medici. Yeah, I do. I just don't have the latest expansion that came out today. So, okay. So PDUFA calendar today is the 22nd. No, I want the FDA calendar. '23rd and 24th is this conference. So ONSI is going to be a play. Seal is going to be a play today. I think I'm going to take AQST off the list. I know that they have good news, but I'm going to take them off. I'm going to get rid of Side-Eye. I don't want them there. AKTX had... On Moderna stock. Okay, so my take on Moderna is the same as it has been. Moderna's rise to fame was on COVID, and I've been saying this for months that it's not going to be the first to market. The medical data didn't support that. I think that they fudged numbers and they got caught with their hand in the cookie jar. Honestly, guys, I see Moderna returning back down to this $30 level. Right now we're at 67. I think we see a decline. I know pre-market it's up a little bit, but I think we see Moderna continue to decline all the way down to that 30 mark. They're just out. They're out, and they can't seem to accept that yet, or the investors in it can't seem to accept that. But it is a reality. All right, guys. I'm just gonna run a 60-second break real quick. I'm gonna grab some water, and I'll be right back. There's nothing that's tracking the pipeline specifically on vaccines. As far as who the next best is, so there were 8 companies in the running on that. Pfizer, Johnson and Johnson, mRNA, IPIX, AstraZeneca, Gilead. Trying to think of what the other two are. So what they started with was 12,000 drugs, and they narrowed it down to 12, and then from the 12 they narrowed it down to 8. And now with Gilead clearly not being the vaccine, and with mRNA not being the vaccine, what you're left with are 6 drugs. For me, my pick on this is IPIX. I think Berlocidin is right up there. It's a 3-in-1 potential. I really, really like Berlocidin. MBRX is another one that's got 100% potential right now. SRNE is one that claims that it does, but it doesn't have any medical proof yet. So, yeah. I like the data I'm seeing from MBRX, and I'm liking the data that I'm seeing from iPix. Yeah, those are long bombs. Yeah, and I mean the worst thing a CEO can do is push a press release out and then have the press tell him we're not going to publish that because it looks absolutely awful. It looks awful. We're not going to print that. And then he prints it anyway on his own, and the whole world kind of takes note for a day or two, and then they're like, "Well, nobody else is believing this. Why isn't anybody else talking about it if it works?" And then when you come out with the response of here's a peer review or here's a medical study, here's my data, that kind of assuages it. Right. It's not funny. It's driving me nuts that MBRX is halted and SRNE is not. Because the big difference between the two is MBRX released medical papers demonstrating from unbiased third parties, medical reviews, peer reviews saying here's the data on our drug performance, and they got halted. SRNE comes out with one claim completely unsubstantiated, and they're open to trade in the market. Like, and all we know on the MBRX halt is remain halted pending more news. We don't even know what that means. More news. Now, that just because MBRX is halted doesn't mean that they're not continuing work on the drug, right? The FDA hasn't halted their work at all. Yeah, there's not going to be it's an indeterminate amount of time, but um, there are people picking up private positions in MBRX during this time, which should be encouraging to you. I think that if people seriously thought that MBRX was going to be taken out or delisted on anything, they wouldn't be growing their positions, especially these larger funds like Two Sigma. I don't think that they'd be increasing their positions. I think they'd be decreasing them. They'd be trying to get rid of their positions. Oh man, Argentina as a country is prepping its ninth default. Man, oh man, oh man. Here's an FDA calendar for everything in the biopharma industry, but not not specifically Corona. Okay. Good morning, Nedall. Dylan versus Doug. What's up, guys? Okay. So PDUFA calendar. The only one that's tagged for something over this weekend would be ONSI, with their presentation this weekend, May 23rd to the 24th. But updated data is coming in for sure. Second half of 2020 is when you expect this to be final data, but this could potentially move on this. So I'll probably be looking at some kind of a position today. So IMMP and Seal are my two big ones for today. Those are the two ones that I'm really, really liking. Seal got not only an orphan drug designation, but a very rare pediatric designation, which means that it not only can be fast tracked, it can be fast tracked. It's an orphan drug, so it's going to get priority status because there's nothing else that really does what it does, and it's for children, and it got pediatric approval. So like this is a golden child of what's out there. So I'm pretty pumped about that today. I don't know how much it's actually going to move pre-market, but that's a huge deal. It's a big player. Okay, let's head over to the news and see what's going on. This. Yowza. It's crazy. China's saying they're going to do more, they promise. Okay. So India's got that interest rate cut. Bank of England rate cuts have had a muted impact. Yikes. Record retail losses across. There's gonna have to be some major innovations. Right, COVID-19 vaccine movement. There we go. That goes out. Hong Kong, China is driving people a little nutty. US, China is driving people a little nutty. Okay, so I like AT&T and Verizon a lot. I like AT&T, I think, a little bit more, just because I think they're better positioned for today's markets. I think they're better positioned for 5G. Um, Come on, what are you doing? Search for ticker. This. T. Okay. Yeah, I like these guys better. 7% yield versus VZ. But the one I think I like the most is actually T-Mobile. Um, yeah, I like T-Mobile is the beast that's gonna win it as far as 5G goes. So that's probably the one that I'd like to look at the most. Just for growth, but you're saying for dividends, so I mean that's not going to be a dividend play. 7% yield, 4% yield. Yeah, I still like AT&T. Oh, that's interesting to know. So, as a foreign investor, withholding tax is 30% on dividends, but zero on capital gains. I wouldn't go near banks. I would absolutely stay away from banks. Let's go back over here, guys. So one of the things I like about Koifin, if you guys haven't seen this tool before, you're new to the channel. This is Koifin. It's a fantastic tool to get oversight on the entire stock market in a quick shot. You'll see the U.S. equity sectors here. Here's financials. Here's the XLF. This is the performance of the banks. Okay, so look at this return here, right? Now, if I add in a couple other markets like XLK, this is the tech sector. If I add in XLE, no, XLG, XLM, XLB. Okay, XLV, that's the one. Okay, so what I've got up here on this chart, guys, is XLF, which is the financial sector. It's an ETF that just kind of embraces, it gives you a snapshot of what the financial sector is up to. And then you've got XLK, which is your tech sector, and XLV, which is your bio sector. Okay, take a look at the difference between these sectors, right? Even if we're just talking, so let's not. There's a lot of people that want to compare apples to apples, so let's do that. Let's go to 6 months. Okay, here we are at the peak, absolute peak. See how the banks are really stable, but this has that increasing line towards January when we were at record highs? Okay, so we get our decline, right? Dead cat bounce, dead cat bounce. They marry each other, and they should, because the market, for most purposes, trended that way. So, dead cat bounce, back down. Okay, but look at the recovery trend on the way back up. So, XLV, right? XLV is the top line. Never left its position and has gone back up to almost where it was in February before the drop. Okay, so that's bio. Tech sector. Uh, so pre-drop they were open at 100. Six at $96. It's almost returned. Okay, let's do the same thing here with the banking sector. 28 bucks is where it was. 22. I really don't like the financial sector right now. I think the financial sector is carrying a lot of debt that isn't getting paid. They're having to push back. Interest rates have been cut to zero, almost zero, leaving them with no ability to actually make any cash on that. Um, yeah, I think that with more forbearance, less people taking loans, just most of the banking products, nobody's interested in bonds, nobody's interested in high interest savings account right now because a lot of the people that have liquid cash aren't looking at high interest saving. They're looking at putting money directly in the market on $0 commissions. There's a lot of banks that are being, there's some investigations around fraud on the number of accounts. There's a lot of already seemingly fraud on the issuance of PPP small business loans. So there's a lot of concerning factors surrounding the financial sector at the moment. I would just steer clear for now. I like tech. I like bio. Those are the two to play. Bio is insulated from the COVID. If anything, it gets a surge from COVID. Tech is tech. Tech is going to be around, and as we head into a season of innovation, I think tech offers you more plays. Now, tech is not something I'm super savvy about, just because it's not an industry that I trade. However, there are lots of people out there that do great stuff on tech. Martini Rita is one that I recommend you guys follow on Twitch and Twitter. The Stock Guy is another one on Twitch and Twitter. I recommend you follow these guys. They're going to do a great job of breaking things down for you. Stock Guy's active during the day on Twitch. He live trades the market. Martini usually comes in the last hour or so before market close, breaks down what's going on, and then does education into the night. So, yeah, exactly. So Martini and Stock Guy, the two of them, I highly recommend you check these guys out on Twitter. Check them out on Twitch. I know Martini has a YouTube channel going now, so actually, I was able to do a video with her. Let's see if I can find it here. YouTube. That's all about how you trade market psychology. Um, so trading on Maslow pyramid. Okay, so highly recommend you guys check this one out. I was able to join Martini Rita on this one. Breaks down just the psychology of the market, how that's going to work, cultural psychology, how you can understand where we are on that, and how to use that effectively to grow your portfolio. Yeah, yeah, it's great stuff, guys. Six Flags. Okay, so my thoughts on travel and retail through this. Um, Whether it's what is it, six? Yeah, six. Disney. Let's add Disney. Oh, let's add Cedar. Okay. So six Diz and Fun. Okay. Here's what I see happening in the US, guys. With international travel all but locked down, nobody wants to get on a plane. People are going to be traveling and looking for domestic entertainment, which means I think there's actually huge potential on companies like Six Flags, Disney. Um, yeah, Six Flags, Disney, Fun. I think there's huge potential. What's SeaWorld, I think, is publicly traded too, right? Sea World Entertainment Company. Yeah. So C's. I think all of these have really, really great potential. Uh, I think we see them. None of them have really recovered to the where they were pre Fallout. So I think that there's huge opportunity here still. Obviously, Disney is the biggest piece in the game. The majority of their income comes from their parks and their cruise lines. So I think Disney is a big beast when it comes to that. But these guys, their entire business is from their parks. Um, so Disney's going to have their films opening back up with movie theaters. You're going to have their parks opening up, cruise ships opening up. They kind of get more of a broad COVID reopening benefit. But with these guys, I think as people look to take trips across domestic U.S., these parks pick up in a big way. I think we really do see. I know people are like, well, what about the crowds at the parks? You got to do something. You got to do something. You got kids all summer. You're gonna go nuts if you just stay home all day. So I really do see people making a move on these. Um, What's up, Dunhill? Yeah, I would just recommend that you take a look at where they were pre-dip and don't play beyond that. So if you're going to take an options play, I shouldn't make recommendations. I don't make recommendations. I'm not a financial advisor. It's my opinion. My opinion is I would be looking at it returning to where it was pre-drop. Um, as of right now, I think that's probably the best place that we can go. Guys, that is a healthy reminder. I'm not a financial advisor. What we talk about here is just opinion. It's a couple of friends talking about what's going on in the market. That's it. Make your own plays, do your own due diligence, come to your own conclusions. Okay. Um, it's Friday, ladies and gentlemen. I don't think it really impacts Starbucks at all. I think when Luckin Coffee is due for a delisting, um, I don't know that it recovers. As news tightens around fraud, about acquisition, about I mean the SEC is going to be watching them like a hawk. I If anything, I think it heads to the OTCs. I think it's doomed for sub dollar. It won't meet the requirements. It'll get delisted. And if it gets taken down to the OTCs, you're never going to see it come back to the market. So I mean, I would stay away from Luckin Coffee. As far as Starbucks goes, I think Starbucks is due for a run. I was talking with Martini about this yesterday. I think Starbucks actually is well positioned for some gains here. Again, I think that it returns up to this 85 level. Q4, I think it's going to be back up here, no problem. I'm trying to think of what positive news is supposed to come out today, and the financial calendar has nothing. There's nothing good coming out of this today, other than the oil rig count, which hopefully doesn't go down again. Morning, Mr. McJay. Nate, yeah, I just don't see it, man. I don't see any positive news that's going to drive the market upwards, short of news surrounding Corona, but we're not really getting anything on that front. Um, American Eagle gets an upgrade. ARGX gets an upgrade. Morgan Stanley gets an upgrade. Yeah, I mean, like, there's just not enough going on. Baba. Baba. So my thing with Baba is for all intents and purposes, it's the Asian Amazon, right? So Amazon, Baba. I want to do that either. I don't want this to be Baba. I want this to be Amazon. Um, okay, so what's interesting is as we're watching this, let's go with 6 months. February. So this is the big drop, and it doesn't look like it's a big deal with Amazon because they didn't really. Amazon's actually higher than they were in January. Now, if you take a look at Baba, okay, so here's the drop, dead cat bounce. Here's the low, okay. You'll see both of them have just slowly ticked back up. Now here in April, Amazon gets a big uptick, and so does Baba. And then Amazon keeps going for a while and spikes, and then we see a decline. And Baba does the same thing. And then we keep going up and up and up, and there's a little bit of a decline here on Baba, but then it returns right back up. And now we're at 197. I like Baba where it is. I like Baba moving this upward trend. I think it mirrors, I think it has a one-to-one, maybe not a one-to-one, but a very direct relationship with Amazon and how Amazon performs. I think on earnings, you're going to see a lot of buying in Asia via remote because, I mean, they locked down in a serious way, right? They locked down in a very real way. South Korea, Taiwan, China, Hong Kong, the lockdowns were severe. They were military imposed, which means a lot of people were only getting their things through delivery. I really like Baba. Um, Now, Baba's got this thing of flirting with 200, so not at all. But yeah, I mean, I just think that there's a corollary between the two. Not that they're tied in any way, but just that they are similar products in different markets. Now, should Baba be worth this? No. But should Baba be worth more than $200? I think so. I think Baba's a 280 $300 stock. And it just can't break through this 200 line. But I think there's definitely more value there. I like them. I do. So if you've got them through earnings, fantastic. I think you'll be okay. Caesars Entertainment to resume operations in Las Vegas. That's a big deal. Caesars good money. Yeah. So Caesars is going to go back up. What else we got? Nothing there. Okay. Check out StockTwits. So Baba's down 1.4 pre-market. Do they have a ton? OMG X? Oh. Crypto. This crypto stock is up 61%. Pen's up 34. Let's check the Robin track for today. Actually, I'd like to check that list that we built from yesterday. Baba's down. Baba's down. Help grandma up. Yeah. Am I in crypto too? No, I'm not in crypto, but I am aware of the market. I am watching it because I know people that have large positions in crypto, so I really want to keep an eye on it, try to understand it better. Okay, guys. So here are the one-day changes on the top 10 from Robinhood yesterday. Just to be clear, had you taken a position in these, first thing out the gate yesterday, here's how you would have performed across your portfolio as a whole. There was only one loser. Oh, no, there was a bunch of losers here. So it would have been a 50-50. Facebook went up, GE went up, Dow went up, NNDM went up, Penn went up. RME, VBIV, Amazon, RMED, INO, and Fun all down. So let's do this again here. I'm going to pull up Robin Track. And we'll put this over here. Okay, popularity changes. Look back period 1 day, changes to the increase. Okay, let's put the top 10 up here on the board. Okay, so clear the list. Okay, so ACB is the top one. AZN is next. Amazon, Dow, FB, UCO. Okay, what's your opinion on how the pre-market influences regular hours? New to investing and unfortunately dropped a lot on QQQ at 2:30. Also, are you expecting what the retest size? Okay, so three big questions. Does pre-market influence regular hours? Absolutely. It shows you big players' insights and thoughts on where the market is going to head, and that does definitely influence, at least at a psychological level, if not a technical level. Um, it makes a big difference. Understanding what's going on pre-market is a huge deal, which is why I take this time in the mornings from 4:30 to 7 a.m. to let you guys know what's going on, let you know to watch for, and then I get off at 7. So from 7 until 9:30, you guys shouldn't just be logging off and not doing anything. You guys should be watching what's going on. Um, Hi, come here, little dude. My little man is starting to crawl like a maniac and just decided to say good morning and crawled into my office like a little sneaker. Hey, boy. Mwah. Okay. Okay. So there's our list of the top 10. Everybody saying good morning. Can you say hi? You say hi? No, not yet. He doesn't know his tricks yet. I'll have to start teaching him. Yeah, I can read that for sure. Okay. New to investing, unfortunately, dropped a lot on QQQ. Okay, so QQQ, let's discuss QQQ. If you're new to investing, I highly recommend that you should not be touching this. So this is a generalized ETF, guys. Please, 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 if you are new to investing, take a look at the ETFs. You can actually go into what's in an ETF. Literally Google what holdings are in QQQ. Take a look at what's performing in QQQ. You're going to see that 90% of it isn't performing. So as a new investor, you can't afford to have 90% of your portfolio not performing. And people need to start seeing ETFs as that. Oh, well, yeah, but it's still not going down as much as all those if I was in them. That's true, but you're also not going up with the ones that are winners. And it's so readily available to you, that knowledge. There are better plays than this. Now, QQQ. What do I think is going to happen with QQQ? So you were in it at 2:30. Why I would have advised again, I can't give you advice. Why I personally wouldn't have been at it at 2:30 is because we look back at all-time highs in the stock market and it only went to 235. So for me, I just don't like this as a play. I don't play short stock, so I don't play it to the downside. This is risky. Do I think that we're going to retest these highs again? I think we are due to see a resurgence in the market on Q2 earnings. So it is possible it goes to 250, but ultimately, like if you're in options, I don't know what your expiry is, but yikes. But I do think we retest those highs. It's just a question of time on them. When do we retest those highs? I hope that helps. I know that's not good news, man, but I hope that helps. Okay, MyMed files final prospectus in connection with bought deal equity financing. Not for distribution in the US, so this is Canadian only. MindMed, Quebec pursuant. Underwriters agreed to purchase a sole book runner and underwriter. Okay, yada, yada, yada. So base price of this. Typically, this issue price is below. So the idea with the offering is the Shroom Company, right? I thought we had talked about this. Okay, so what they're doing is, if we look at the current stock price on MMMED, okay, so if we take a look at MMEDF, 42 weird. Prospectus announced offering this file for a final short form prospectus with securities commissions or similar authorities in each. Oh, 53 Canadian. I was like, weird. Normally, when you see an offering, it's below value. on this. But this is showing us in US dollars. So give me 2 seconds here. Okay, so 53 US would be 38. So yeah, what they're doing is they're offering it right at the 50-day SMA. They're saying, here, you guys can buy it on a bit of a discount. And they're doing that to raise money essentially. They're saying, okay, our stock is a little bit up from where it normally is. We need to raise some liquid cash. Best way to do that is to offer a bulk portion of shares at a lower price than where the stock currently is, if that's of interest to people. And so they're hoping to raise $11 million off of that, and that's often used to develop pipeline, yada, yada, yada. But this is not to be distributed in the US. So this is for Canada only. Only in Canada can you do this. Only Canadians are allowed to buy into this. So if you're in the US, you won't be able to. If you wanted a piece of this, you'd have to be a bigger player, though. You can't be a day trader. You can't be a small investor. Yeah, so there's that. Hey, Techie Chris, how you doing, man? What is your opinion on Wynn Resorts as a dividend stock and as growth? Okay, great. So resorts is one aspect that we haven't got into. First thing I'm gonna do, I'll pull the stock and we'll see where it's at. Win 83. So again, guys, like I've been saying, I think that over the summer we see domestic travel increase, which means hotels, which means resorts, which means that kind of stuff. 135 seems to be where it's comfortable. I think it is slowly creeping back up there. So as a dividend, currently there's no dividend listed. They will probably go back to a dividend Q3, Q4. But for right now, there is no dividend on it. So don't really consider it as a dividend stock. As far as a growth stock, at $83, it's actually a really good price. Okay, I'm going to let you go play with Mama, boy. Go get Mama. Go step along his own. Okay. Now, one thing that we want to look at. Now, I'm saying that there's no international travel, so you need to take that out, right? So what you want to do is go to Wynn Hotels, U.S. locations. Okay. So what we want to know is Wynn U.S. locations map. So we want to see how many locations Wynn has. Is it just the one holding? Wynn Resorts. Here we go. I will definitely get to Zynga, El Dorado, and RTX. Wynn Resorts, public trade company in Paradise, Nevada. Operator of high-end hotels and casinos, was founded by Mirage. So casinos, I think, are going to have a bounce back in a big way. Vegas is going to be a major tourism spot over the summer. No. Okay, so here are its properties: Las Vegas, Massachusetts, and then it's got the Macau. So these are going to do quite well. So in the same way that international travel is going to be locked down over here, same thing with over there. I think Macau is going to do quite well. These are going to do well in China. There's a huge gambling culture over there. I think this does really well. Massachusetts, so they do have a Boston Harbor location and a couple in Las Vegas. Las Vegas is going to be big. I think they do really well. I do. And as sporting events start back up, you're going to see these casinos do very, very well. Which brings us to Zynga and El Dorado. So Zynga. I would put Zynga, if I personally was looking to be in Zynga, it would probably be around 10 to 12. I think I like it for El Dorado. El Dorado is a casino, so maybe a little bit more depending on how deep its cut is. Yeah, so I would say back up to this 60 line is reasonable by Q4. So guys, again, I'm talking when I give you my insights, I'm not talking a day play. So if you're asking about day plays, I don't know. I don't make day plays. I don't get in and out on a day. The majority of my plays are 6 to 18 months out. Any views on RTX? Yep. Huge shout out to Junior Spidey Gax. He is the first Facebook person to actually drop in the chat and say what's up. So huge shout out to you, my man. Let's see. RTX, Raytheon Technologies. This is a solid play. Long hold. This is a great dividend stock. Again, I see the potential for this to go back up to where it was at 85. So if you get in at 60 with a 3% dividend yield, that's a nice little increase. Not only are you going to get the growth on it, but you also get an increase on the yield. I really like the stock as far as a long-term hold. It's great for a dividend portfolio. It's a reliable company. The tech's not going anywhere. They're forward thinkers. I really like this one. Yeah, Raytheon, I really like. Yikes! We're going back. We're going back. We blew through 2008. Nice, man. I'm glad you appreciate tunes and the knowledge. China, Hong Kong is brawling again. This is a big thing, guys. This is a massive meeting in China. We're going to get to hear a lot about trade and a lot about COVID today. Okay. Yahoo Finance has nothing new. Let's see if there's anything else here. IMP. Okay, nothing there. Oh, that's a cool idea. I love that idea. So we did just do Six Flags, but I'll revisit it. Six Flags is one that I see is very strong. I see it going back to these pre-levels of 45 on the basis that international travel is going to be locked down, so people will be looking for something to do domestically, which means theme parks in a big way. When you've got kids home all summer, theme parks are a thing. So SeaWorld, so Seas, Six, Cedar, and Disney, expect to see those have a decent summer. Into Q4, they're going to look pretty good. What about Well Tower? Well Tower. Okay, so 46, they're still at half of where they were. Let's see what Well Tower does. Real Estate Investment Trust, so REIT. Okay, so the big thing with REITs, guys, that you need to watch for is this upcoming stimulus bill. There's a ton in there to help cover costs of forbearance and mortgage defaults, rent defaults. That's what Welltower needs. So I'm not really looking at Welltower just because it's got a 5% dividend on a $40 stock. For me, the one that I'm in for an REIT is MFA. Now MFA is a lot lower, guys. It's $1.60. It was up at around the $7 mark, $8 mark, which is where I think it goes back to Q4. But if you just want to look at the two of them side by side, right? So here's Well. So I'm a long equity player. I don't play options, okay? So what I'm playing here is the price movement on the stock. Now, before COVID hit, MFA doesn't currently have a dividend listed, but before COVID, they had a 10% yield. Just want to make sure that's accurate. Dividend on... Look at that. Look at that dividend. Yikes. Historically. That's historically. Um, so it's a quarterly dividend. Their most recent one was in April of 2020. 80 cents is what got paid out on this. That's crazy, right? But usually it's a quarterly dividend. So a quarterly dividend, and it's anywhere from 10 to 12% on that quarterly. The thing with dividends, guys, what you can do with them is, okay, so time to go to the sheets. And we'll use them. Let's build a sheet here. Breaking down the dividends. Breaking down dividends. Okay, so here we will have MFA. Here we have Well. Okay, stock price currently. $1.93, 46.42. $1.93, 46.42. Okay. Now what I'm suspecting is that they're going to go back to where they were. So 7.335, 692, and 81.42. 692, 81.42 is where they're going to go. Okay, so this is current price. Man, okay. XV current price, target price, yield, volume. I guess it should be yield current, yield target, 1,000 shares. No, let's say $1,000. Okay, so MFA right now, right? Right now, if you were going to look at how many shares at $1,000 that you could get, right? So what we do is we go here, we get rid of that, we go here, we can do this, equals to this, divided by 1.93. We're going to assume you can't have fractional shares, so you're going to get 518. That's what you could get for that right now. This one's going to be this, divided by 46.42, assuming there's no commissions, right? I set the target price, and the target price that I'm setting is a return back to where it was in January. I assume that as the economy reopens and we see the next stimulus bill come in for REITs, we're going to see it going back up to those levels. Okay, so it's just a target. You guys can set your own targets, but for me, I think that these are reasonable targets to set for this. So you've got potentially right now you could grab, if you have $1,000, you could grab 500 shares, 520 shares of MFA, or 21 shares of Wells Fargo. Okay, so we know that these have a value of 1,000. Okay, so gains on value. Take that same 518, right? Equals to this times your target price. Okay, so just on growth into Q4, you'd make close to $3,500 if we head towards this target price, okay, on both sides. So $3,500 on just your holdings. Okay, this is not on the dividend yet. You'd make $3,500 on MFA. You'd make $1,700 on Well, so it'd be less. Now, what you need to also take into account is currently there's no quarterly dividend on MFA. So we would have to say Q2, Q3, divvy. You get nothing. You get zero from MFA, right? With Wells, though, you're going to get I think that when you see that large gap like that pre-market, people are still just trying to figure out the position of the stock. The bio that I've looked at on Moderna is not promising. And as more and more people are coming out and saying that it looks like funny numbers, it looks like funny numbers. Okay, so they have a 5.32 dividend yield. Okay, so it is going to move a little bit. We can't use an accurate price per se on this to know where the stock will be, but let's just assume it's at current price, okay? So equals to 5.21. Okay, so we want 46.42 times 0.521. What do you mean error? Give me an error. Times. Okay, so for every share of Wells that you own, you get an extra 241. So it's actually this number here times the 21 shares that we own, right? Times 21 times 2. Yeah. Okay, so you would get $100 off the dividend. You would get that 2 times. Sorry, you would get the 50 2 times. So you would end up at $100 that you don't get from MFA in your dividends. Okay, so you would probably just roll that back in. We're saying 46.42. So now you would end up with 23 shares instead of 21. Whereas here you still have 518 shares. Okay. Now, when we see that price movement up to 518, right? Or up to 692 in Q4, we're going to say the dividend comes back. And we're going to say that we see a 10% yield on MFA. That's just where their yield has been in the past. So times 0.10. So you're going to get 69 cents a share, okay? With Wells, it's going up to 81.42. They still keep their what was it? Their yield was 5.2. Okay, so it's 81.42 times 0.0521. Okay. Okay, so you see how the dividend has gone up, right? Like, it's going to be this times our 21 shares that we own, or 23 shares that we own now. Oh my goodness, come on. Come on, guy. Okay. So you get 97 bucks off the dividend with Well. Okay? With MFA, times the 518 shares we have. Okay, so at the end of this, by Q4, if we started in this today and we said, okay, well versus MFA, what are we going to do here? We started with $1,000 in both. We started with our shares in both, but the gains total that we see on this would be this plus this. So that's a sizable difference, right? Like you're looking at 300 almost 4 grand. 4 grand in gains from both the rise in stock price and the dividends that are coming in, as well as 1,800 here. Now, the beautiful part about this is just the gains on Q4, right? So what you do now is you go, okay, well, we had 358 in dividends here, right? So what we can do is we can actually take this and go, okay, well, if I have 358 in dividends, what I'm going to do is repurchase more stock with that. I'm going to get 51 new shares, right? And so you see how that kind of steamrolls. Here, okay, we've got $97, but $97 is only going to buy you one share. You're only going to be able to get one share of Wells on it. So you're getting 50 more shares of MFA, but you're only going to get one more share of Well. Okay? And people say, well, isn't the value the same? Well, no, the value is not the same. This is actually building faster for you. So for me, this is why I like MFA over Well. Just a breakdown. Like this is the math that I do in my head, spat out onto a spreadsheet for you guys. Hopefully that is helpful in understanding what's going on and where. Now, this does operate on a couple of different assumptions. The assumption is one, as people return and economy reopens, people start to pay their rents, they pay their mortgages, and these REITs are fine. The other one is that a stimulus bill of some kind, a cash injection, comes in for forbearance and mortgage losses and rent loss, that results in these guys seeing some payouts. Now, let's check the Senate bill. Senate Heroes Act. So this won't be voted on today. After the recess from Memorial Day, we're looking at it being brought to the floor. Junior, I'll definitely take a look at. Is that LVR? I'll take a look at LVR right after this. No problem, man. I'm glad that if that's helpful, I'm glad that it's helpful. Republican whip also indicated that 25th May holiday was pivotal in the bill being discussed. My guess is more daylight recess is unlikely. Cuomo's putting pressure on the federal government. Not at all. So this is a ludicrous statement coming from a state governor. An absolutely ludicrous statement. Show the same consideration for the workers that you've showed for the corporations. What Cuomo, and this is a constant Democrat absolute shit show when they do this, and it drives me nuts. Absolutely nuts. If you don't give money to the corporations, and the corporations were given in the form of PPP loans, so payroll loans, okay? That means that they were given not for them to spend on whatever they wanted, they were given to them to ensure that people don't get unemployed. That money, that consideration as a PPP loan,
wasn't a consideration for the corporation. That is a consideration for the workers. It wasn't a check, here, company, do whatever you want with this. It was, here, company, pay your employees. This guy is an absolute clown when he makes statements like this. If he looked at the bill itself on the HEROES Act, what's up, Tim? If he looked at the HEROES Act itself, he would see that there is very little in there for the workers. There's lots in there for the pot industry. There's lots in there for USPS. There's lots in there for state government and municipal government. But as to the workers, the low-income families, the people that need the support, there's not a lot in there. There's not. And the stuff that is for the workers, they didn't even take the time to price out. The only stuff they took the time to price out was the stuff that they were interested in. And I'm telling you guys, this is not me just offering conjecture. This is me very much. Senate House bills. I spent probably 2.5 hours, 3 hours reading this entire bill. 1,800 pages. And I itemized line by line by line by line everything they had priced out, where the support is going, who's getting what where, for what. 25 billion for USPS, right? Like 75 billion for small business administrations. This is loans. These are loans that have to be paid back. This is not cash made available. Internet is getting $6.5 billion. Okay, now wait for it. Here we come. Children and low-income families. These are the people that you want to help, right? 1.5. Public health and social services, 4.5. State government, they're getting 90 billion. Okay, if you want to go to college or university, they're getting 10 billion. Okay, but the families, the workers, the people that we're all supposed to be caring about, they're getting 6. Okay, 7, I guess. 15 and 4.5. No, that's 6. They're getting 6. So they're getting 6 billion, okay? So let's see who gets more than low-income families and social services, okay? Anybody over the 6 billion mark, so states outside of the states and the states themselves, so Puerto Rico, Guam, Mariana Islands, Virgin Islands, American Samoa, they're getting 20 billion. Tribal governments are getting $20 billion. The states themselves are getting 250 billions depending on their need with COVID. Local fiscal relief. So this is for municipal governments. Election assistance is getting, well, they don't get 6 billion, so we won't count it. USPS, the postal service, is getting 25 billion bucks. Health services, so primary health services, 7.6 billion bucks. Not like this is a drop in a bucket across the U.S. Supporting the hospitals. This one is staggering, guys. The National Institute Against Infectious Diseases is only getting 500 million of this thing. Highways are getting $15 billion. Buses are getting $15 billion. Like, where is it? Where's the pot line? This is the one that just hurts me. Pot and hemp products, $6.8 billion, guys. $6.8 billion. Now, the other scary thing with this is, after the first couple hundred pages, pricing disappears. So expansions to credits not priced out. Health provisions not priced out. Private insurance not priced out. Loan forgiveness not priced out. Agricultural laws, vets, not priced out. Medical equipment, emergency rental assistance not priced out. Forbearance clause not priced out. Emergency medical leave. So we don't actually know how much money, whether it's going to be more or less, that is going to go towards these people. So when Cuomo comes out with some bonehead statement like this, like, consider the workers, okay, I'm all for that. I'm an advocate for that. I love that idea. Let's support the workers. But I don't think you support the workers with this bill. I think that this bill is an absolute atrocity. And even worse, the Democrats sat on this thing for weeks and weeks. And this is the best that they could deliver. And when they dropped this bill, they dropped it at an absolute inopportune time where we knew we were headed into a holiday, into a long weekend. There's no way the Senate was going to look at this thing. And now we are stuck looking at this thing into June instead of possibly having a bill in May. And because the bill is so ludicrous, this bill itself will just have to be completely turned down, or it will have to be altered. But I very much just see the Republican Senate voting this thing down in entirety and putting together a response bill that is not so ludicrous. I think this bill, just like McConnell said, is dead on arrival. DOA. And it's a shame because the people that suffer are, well, actually, it's a shame because people were looking to the government for help. Unfortunately, it's going to have to come from the private sector. It's going to have to come from companies. It's going to have to come from companies retaining employees, and it's going to have to come from companies caring for their workers. And it's tough times. I don't know that that's going to happen. Okay, so first we're going to look at IVR, and then I'm going to take a look at. Okay, so IVR, Invesco Mortgage Capital, IVR Holdings. Okay, so this is good. They're residential mortgage-backed securities that are guaranteed by the U.S. All right, so I mean, it is a play. What is its dividend? So 7%. So for me, again, so let's pull up IVR alongside MFA. Okay, so similar returns possible. So you could go from the 279 it's at now to 13, or $1.66 to 6-ish, right? So what we're seeing here is probably a quadrupling. What we're seeing here is probably you'll get so 3 to 14, you're going to get $11 a share on a gain on this, versus the $5 a share that you're going to get on this. Now, when that's all said and done, though, you have to go back to this sheet, right? So if we just change these numbers, where this is, instead of this is IVR. Okay. Current price is $2.79. Target price is, what's it saying there? What's that? $14.32. $14.32. Okay, so number of shares that you're going to get on this is this. No, it's 1,000 divided by this. So you get 358 shares. So you're going to get more initial gains on this, okay? And then when you break down the Q3 divvy, it's 46, but they don't have a $5 dividend. They have a 64 divided by 4. So 16 versus the 80. So they're coming in at around 5. What did they say? 6.97. So 6.97 yield. This is supposed to be this times 6.97 times this equal to our times E. What is this? E. Six. Okay, so 612, you'd be able to buy 612 divided by 279, 219 more shares.
which takes our total up to equals to this plus this. So you'll be holding 577 shares. This would be 1432 at 6.9 times 577. Okay. So what you're looking at is this much in gains. Yeah, this much in gains. What's this? Times 577. So that's how much you get. You'd be able to buy an additional 570 divided by 570 divided by 1432. You get additional 39 shares. So the question on the drip portfolio is this. Once it gets back up to this price, these REITs don't move. That's it. So you're not going to get any more growth. So you are going to get some initial growth on this. Like this is a better gain, right? You're going to see 56.96. However, you're only going to start to see 39 new shares on this instead of 51 shares over on MFA. So you'll actually build more drip because you're with the dividends you're getting paid per share, right? So the more shares that you have, the better off those dividends are going to yield for you. And really that's just the roll. So for me, these are very, very close. Into Q4, you would get, if you're looking for just a Q4 payout and you're going to exit your position, that's IVR looks like a fantastic play. If you're looking to build a long-term drip, MFA I think I like more. Hopefully that makes sense. USO. I'm not a huge fan of USO, guys. I'm not. Instead of USO, I recommend you take a look at MRO. Look at it. Look at an individual company. This could double for you guys. It could go back up to that $12 mark. I really like it for that $12 mark into July. Yeah. I'm not a fan of USO. I prefer MRO. Well, it depends on what you want to do. So with these type of stocks, if you're looking to put money in now and take it all out in December, so if you're looking on a growth play instead of a dividend play, IVR is actually the better play because if you're exiting in Q4 and it hits our price projection for Q4, you'll actually have more cash in hand through IVR. But if you're looking to put money in here and create a drip portfolio, so it's going and going and going and going and going, right? The reality is this is going to acquire more shares faster, right? So there will come a tipping point where, because the stock prices aren't going to move, there's going to be a tipping point where MFA surpasses IVR just on sheer volume because it gains more stocks every single payout, every single dividend. On top of that, it has a higher yield on its dividend, right? So you're looking at a 10% yield versus a 6% yield or a 7% yield. So over time, that may sound like small numbers, but if you're somebody who's young, let's say you're in your 20s or 30s, and you start a drip portfolio, over 30 years, those minor differences make huge differences with compounding. So for me, I think MFA is a really, really, really good drip option. IVR is the better option if you're looking to exit on Q4. All right, guys, I'm going to take a 60-second breather here. I will be right back. I'm going to say good morning to my lovely wife. I will be right back. Feel free to throw any other stocks you want me to take a look at in there. We're coming up on the last half hour of the show, so throw it out there, and I will be right back.
All right, let's get back to it here. What do we got? Coup. Coup, 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 coup. Coup? I don't see a coup. I see a cool, but I don't see a coup. Unless you're actually saying cool. All right, let's go here. We should be starting to see some earnings reports come out. Amazon to hire 50,000 in India, so US is not getting jobs. Let's go back down. Where are we? Caesars is going to reopen. Futures suggest more losses at the open, so we're looking red heading into the day. Okay, there's not a ton there. Yeah, I do. I think Luckin Coffee is fated to fall to the OTC. I think Luckin's gonna be sub $1 very soon. Um, Sanofi, that's the other one I keep forgetting. So Moderna's won't last. Johnson Johnson's late to the game. AstraZeneca's late to the game. They're more focused on cancer and the rest of their pipeline. Sanofi, I haven't heard much about. Pfizer, they're late to the game. Experimental vaccines have a very high failure rate. That's what I'm saying, guys. This is so risky rushing these vaccines out like this. What's interesting here, guys, is this, okay? So okay, let's get a new sheet here. COVID, okay? So let's say initially with COVID, we get a vaccine. Let's call it COVID. Let's call it Seagon, okay? So Seagon is the vaccine. And let's say initially we are able to get 1,000,000 doses to market, okay? Right now in the world, coronavirus update. Okay, currently in the world there is 1,000,000 cases. These are people who have already contracted the virus. Recovered, we have 2 million, so 7 million of the world's population. So total world population. Yeah, I'm glad to hear you're out, Dunhill. Get out and stay out. So we can take 7 million off this. So there's 7.5 billion people left, okay? So the number we need to hit is 7.5 billion. Is that right? 7 Yeah, that's right. Okay. So no, that's 75 million. Needs to be more than that, right? It's more zeros. Insert more zeros. 3 more zeros. Oh, come on. 7.5 billion. That's 7,000, 75,000, 750, 7.5 million, 75 million, 750 million, 7.5 billion. Oh, okay. Bam. 7.5 billion people. Okay. We can produce 1 million doses of this vaccine to start, and then subsequently we can produce, once we have all the global think tanks driving into this, we could probably see another, let's say, 10 times that. Let's say 10 million. Okay. Okay, so let's say initially this vaccine costs $30 a dose, okay? That's what they want to price it at, is $30 a dose. Tell me false, I'll tell you false. Okay? So 30 million bucks. But this is going to go to auction, and this is going to drive this price up because all the countries are going to compete for this and they're going to want it. So it's going to drive the price up, and first world countries are going to get first dibs. Let's say it, I mean, honestly, it could make it 10 times that. So now what you've got is, instead of by 30, it's going to be by 300, okay? So here you go. Here's this massive difference here, a 10x difference in the millions. My suggestion is this. As this goes down, this price is going to decrease, right? And we'll say it decreases by, let's say, 10 bucks a run. So 290, 280, all the way down till it's back to that initial $30, right? Okay. So this price here, this initial $300 million that's here, two things could happen. We could let this bid up like this and it costs $300 million, or we could leave it at $30 million and take that gap, that $270 million globally, and use it to speed up the process of this creation, so that we're not seeing this massive decline, because it's not just the $300 million, right? It's this number, and we see the penalty all the way down to the bottom, right? So until we get back down to 30, it's not where this thing should cost. This is people that are going to die to get here. Like, how many months is this? Say we get the vaccine in December like we're supposed to, right? December. This is going to take us 3 years to get the world vaccinated against this thing. And that's if COVID doesn't change genetically, which it probably will. So this is not a feasible solution. My solution instead would be, instead of people bidding this thing up to blow up the cost, you take that initial spending that we would have done on an auction, and instead everybody puts that money into production. So as your country, if you want dosage, what you do is you reach out to the company and you buy a patent license. You rent the license, essentially, right? And say, I am willing to pay this much for this license, in order to be able to produce this domestically. And the company that comes up with the vaccine is just going to have to accept that, whatever it may be. And instead of us bidding against each other, now it's a question of how quickly can we move our own country's production forward. And I think that that's going to be a lot more productive way to go about this, because if each country is responsible for their own production, all they have to do is pay a licensing fee for whatever the vaccine is. I think that provides a massive advantage globally to actually getting the vaccine out. So the question becomes, are we looking for equality in distribution, or are we looking for profit? And if any country makes the argument, oh, well, we'll sell the vaccine itself to you in dosage, but we own the production line, which looks like what Trump is already headed towards by moving production of vaccines domestic, you're going to get a shit show, and it's going to take people longer, and people are going to die unnecessarily as a result of it. Whereas instead, you still make money by leasing it out globally for the period that the country needs it. Great. here's the cost to lease the formula or whatever, right? Like, bam, there you go. Make as much of it as you need for your country. Go ahead. And I'm not talking about socialism here. I'm still talking about selling the vaccine that you created, but it's just an upfront cost. Bam, pay this and produce it and get it out there. I think we see a much better result much faster. Um, that's how millennial fixes the world. That's my suggestion. Um, I doubt we'll see that, but that's my suggestion anyway. All right, guys, we've got 20 minutes left on this bad boy. Let me know if there's anything you want to look at. Otherwise, I'm just going to keep scouring the webs. Pinduoduo misses. Beats on revenue. Ooh. Interesting. Beats by 188 million. That's like 20% it beat by on revenue. That's impressive. Free market, it's down a little bit. I like that. I like that. Burberry Group? Burby. %3 down actually isn't that bad for Burberry. Burberry is one of those premium items. Okay, I just want to head here and take a look at our watch list again. Yeah, so NNDM was one of the ones that we had on our Robinhood tracker. It won't be on there now because the day is updated as far as positions, but it was on Robin tracker yesterday. If I switch to relative, let's take a look. It looks like the Robinhood has moved on from it. But yeah, it definitely did have a big pump on Robinhood yesterday. Another one that had a big pump was GMed. Excuse me. DNK. $309. Pre-market, $292. What do I think of SIF? SYF. Yeah, I think NNDM is due for a fallback in a big way today. SIF. Synchrony Financial. Oh, I'm sorry. You were announcing that as a company, Synchrony Financial. SIF. Consumer Financial Services. Okay, news. Tools past 24 hours. So Wells Fargo likes them. About 12.8 since last earnings.
PayPal credit cards, Amazon, and Lowe's. So just as a caveat, I personally don't like credit cards. I don't like being tied to credit cards. I don't like that whole debt facility. I'm not a big fan of it. With this though, they do have some big names in their product. It hasn't had the recovery nearly to the level that it was at, so as spending increases as our fear greed index shifts. So as this shifts into greed, you're going to see more spending. Those types of credit cards are going to increase. Should be good. An interesting thing to note, though, is a year ago, the fear level, like we are more greedy now than we are fearful from a year ago. And a year ago, we didn't have COVID. Yeah, I mean, it looks like that's where we're headed. It'll be interesting to see what happens next week, but we are in extreme greed on put and call options. Safe haven demand is in greed. Market volatility is neutral, but I think that's because the Fed hasn't been pumping like it was. Junk bond demand, yuck. So people are still looking for what's affordable in the bonds. Stock price strength isn't really growing substantially, and the market momentum is in a fear mode. Even though options players are seemingly optimistic, and returns are good, we're not seeing that translate into investment grade holdings. We're not seeing that into new 52-week highs. We're not seeing that into fear. But as with the weeks progress here and we return to these high levels, I think we start to see more and more of these 52-week highs. Trending tickers. Gilead is trending in a big way. Did Gilead get news? Foot Locker misses. That's not a surprise. Oh, finally we get the news. Okay, so this has been big news. I've been waiting for this to drop. Tetraphase has announced that they are going to move forward with an acquisition offer in upfront cash from Melinta. So, as such, the board has notified ACRX that under the terms of their merger agreement, it intends to recommend Melinta bid unless ACRX submits a revised proposal on or prior to Friday, May 29th, that it would deem superior. Okay, so the good news for ACRX on this is ACRX is they win either way on this deal. So the reason why they were acquiring Tetraphase is Tetraphase has a potential COVID candidate and they wanted a piece of that pie. But let's be honest here. If you are just starting down the COVID line now, you're too damn late. You really are. It's just a headline. And you're too damn late. Now, they did have an already agreed upon contract, though, and in the event that Tetraphase goes with somebody else on the acquisition, Tetraphase has to pay out $800K to ACRX for breaching the contract. So that gives ACRX another $800,000 in cash liquidity that came from nowhere for doing nothing. On top of that, Tetraphase is in a binding agreement. So even if Melinta acquires Tetraphase, Melinta, now the owner of Tetraphase, has to also assume the credibility of the contract that was signed with ACRX to distribute and sell ACRX's Desuvia drug, which is their bread and butter, it's their big beast, it's their morphine replacement. So, what's great about this is Melinta is fine to come acquire TTPH, but the reality is Melinta is going to have to sell Desuvia. So ACRX doesn't lose here. ACRX doesn't need to renegotiate this. They don't need the COVID drug. They can just take their $800,000, put that back into their cash holdings. They've got that. It's just sitting pretty. And Melinta has to sell their drug for them. It's a win-win. ACRX comes out huge on this. Now, I get that everybody likes Tetraphase at the moment and it's going to be up huge amounts pre-market. But the reality is, like, it's not worth that. It's just not. Like, the Melinta offer is let's go here.
Like, okay, hold on. Look at the news on this. December enters Chapter 11 into bankruptcy. Okay? Bankruptcy. It's out of bankruptcy, and now it's looking to acquire another company to run it into the ground. So we broke down IVR. With IVR, my thoughts on IVR were if you're looking to play it into Q4, it looks like a strong play. I don't recommend that anybody does anything with it, but IVR was looking like a stronger play than even MFA into Q4. But beyond Q4, if you're looking to build a drip portfolio, MFA kicks its butt. Okay. Okay, so $27 million. TTPH. Total shares. Total shares, 32 million shares. And they're getting $27 million. So they're getting pennies. They're getting pennies for their shares. This is hilarious. This is fantastic news. Absolutely fantastic news. So this one here is AQST. AQST is going to see a good day as a result of this news, guys. It's already up. AQST. So this has got to go. I want to see where Seal's at. Pre-market. It's up a little bit. I want to see where IMMP is pre-market. Down a little bit. Okay. I want to see where RMED is pre-market. Down a little bit. All right, ladies and gentlemen, it is that time. If you guys have no other stocks for me to look at, I'm going to say adieu to you. Feel free, though. I'll stick around for a minute here if you guys have anything else you want me to look at before I head out today. Otherwise, huge thank you for all you guys that have been showing up all week. I greatly appreciate having someone to hang out with while I'm doing my due diligence in the morning. If you guys are not following, subscribing, wherever you're watching this, if you guys want to do that, I am back every morning, 4:30 a.m. to 7 a.m. Eastern Standard Time. I will be here tomorrow, guys. Saturdays, I do a stream at noon, just breaking down how the week went, things that I'm looking at, maybe doing some financial learning, potentially some gaming. It's probably about an hour and a half, an hour stream. So it's a shorter stream, but I'll be around tomorrow hanging out. So hopefully you guys can come in. Levi, yeah. The replays will always be there. But thank you so much, guys, for swinging through. I will catch you next week if I don't see you tomorrow. Take it easy.